Windfall tax, they should be rolled back if crude prices are down. Guess what? Crude prices are down. But before we start celebrating, are they down for an extended period of time, or this is just the financial market, FNO, financial market leverage impact that China will not open up, demand will come down? What are the chances that if demand is down, OPEC may actually come out and start cutting fuel, cutting the production, because that is what they've done in last couple of months. MK Surana joins us. He's got a deep understanding of cycles, GRMs, government policy, and how investors should be looking at oil marketing companies. Mr. Surana, good morning. Thank you for joining us. Oil prices at the beginning of the year were at 130. There were brokerages who had written notes that oil prices could go to $200 or even $300. The same brokerages now are writing reports that oil has reversed, and the reversal this time could take oil to $60 to $70. So what is the reality? It is not $200, and I'm sure it will not be $50.
Good morning, Nikhil, and good morning to everyone. You are right, it's not going to be 300, it's not going to be 50 either. So there are a number of things which has been guiding the crude price narration in the recent past, but in my opinion, there are three factors currently on which are guiding the narration on crude prices. One is the discussions of the G7 and European Union on the curb on the price for Russian oil. That is one. The second thing is the China demand and the general recession theories which is floating around, and the recent increase in the COVID cases in China. And third is OPEC plus narration that they will like to protect the prices and may still consider further production cuts. So currently, I think these are the three main narrations which are guiding the crude prices. Recently, in last 2 days, there was a sudden fall in the crude prices, especially guided by the China demand worries and non-agreement among the European Unions on the actual level of curbs which should be there on the Russian oil and providing the maritime services by the European insurance companies and other shipping companies. The way I see is that probably the curb rate which is being considered right now of $65 to $70 is almost near the rate at which the Russian oil is floating to some of the Asian countries right now, especially the Ural grades. And if that is the level, then probably this is not a major worry as far as the crude prices are concerned. The demand worries are there in China especially. And I think that the OPEC countries may like to protect certain floor rate. So I think 80 to 90 will be a range which we should be considering is a more realistic range of oil in the near future.
Right. Mr. Surana, morning, just correlating it to OMCs back home, because the minute you had that cool off on crude, OMC stocks were jumping up high. Since you've been at the helm of one of the prestigious ones, help us understand what impact does a fall in crude prices have on OMCs, their balance sheets, and whether or not this also makes the case stronger for the windfall tax to be removed if we continue to see a fall in crude prices.
So naturally, if we are not aligning the Indian domestic market prices to the international product prices, then the OMCs will have some sufferings. And because the market prices of the products, especially MS and HSD, had not been moving in the same line as the international prices, so OMCs had shown certain dent in their bottom lines, which has been reflected in the last 2 quarters. It was a result of the higher crude prices, plus higher cracks, plus higher dollar rate as well, all the three put together. And therefore, cooling of the prices of crude, which is now happening. Also, certain cooling in the cracks, especially on MS, it has happened. It is running in the range of $11. Diesel, it has come to around $40, which is still higher. So it has to cool off a little bit more. So definitely it will help the OMCs if the prices are down, and it will also help the government to keep the prices aligned to the international prices.
Good morning, Mr. Surana. Always good to speak with you. So that's as far as, of course, crude oil prices, which are trending lower. There is, of course, a lag when it comes to the oil marketing companies to enjoy the benefit of the prices, because for whatever reason, they were not allowed to or did not follow market pricing for petrol, diesel, at least the auto fuels for some time. We're talking at a time, Mr. Surana, where the expectation is that Dr. Kirit Parikh, like he has in the past, is going to submit a very radical report on liberalization of natural gas prices. What is this going to mean for the sector and particularly the upstream companies, both public as well as private?
So the report is yet to come. I believe that is expected shortly. But there are two narrations which will be, I think, guiding, or there are expectations. The producers who have suffered in the past when the prices have gone too low and it was uneconomical for them to produce will be expecting that the prices should be such that it is beneficial for them to invest in the upstream sector. And recently, in the last, let's say 3-4 months, when the LNG prices have gone substantially high and the gas prices have gone substantially high, the consumers had a suffering, so they will be expecting that there should be a cap. So I believe that the narration will be guided wherein there is a floor price, there is a cap, and there is a range which can protect the interest of both the sectors, the producers as well as the consumers. And in that case, the companies who have got, because the APM gas goes to the priority sector, so the business portfolio of the companies who have got a higher proportion of, let's say, the regulated sectors that may have benefit, and the companies who have got the industrial sector will have lesser benefit. But let's see how the reports pan out. But I think a larger direction may be that in future it may be made market driven. Also, there are two elements. One is there is also a sector in the producing companies who are producing from difficult areas, where there was a freedom of pricing for that, with of course certain cap. And the current gas prices are guided by average of 3 international price benchmarks in US, Canada, and Russia. Of course, with a lag of a quarter in the last 1 year basis. So the domestic prices of gas follows the international prices with a certain
Right.
and when there is a high volatility, then it affects.
Mr. Surana, if you would allow me to so rudely interject at this juncture, Mr. Surana, if you would allow me to interject at this juncture, because, you know, while we talk about the gas prices, and since you brought up Russia too, the fact is, and these are reports that have been coming in. Now, India and China are the largest export destinations for Russia and crude oil. India is also now demanding heavy discounts from Russia from Russian crude oil. How do you see this impacting the landscape? We don't know what the G7 is going to do when it comes to Russian oil. So given that uncertainty as well, and the fact that both India and China together are presenting a case for the discounts, do you see it coming through?
See, currently the Russian oil is coming at certain discount to Indian sector, and as such the crude prices is lower. It is in the interest of the countries like India to be able to import the oil at the economic rate from the countries wherever it can. And therefore, I think there will be a case for continuing to have the discussions to have the oil from Russia to India. And it may be in interest of both the countries. And generally also because if some oil is flowing here, it helps in the overall international prices as well.
Always good having you on the show. Thank you so much for taking the time out.
Thank you.